On Business Incorporated today. Madagascar gets €3.5 million loan for agribusiness. While Ghana gets $1 billion to boost budget financing. Boeing sued $6 billion for Ethiopia and Kenya plane crash. Hello and welcome to this Monday edition of Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's start as usual with major markets in Africa. In Nigeria, the market is closed because today is Democracy Day. It's extended from yesterday. It closed positive on Friday, 0.06%. GSE of South Africa is trading today, but it's on the flip side. It shed almost 2% at 66,455.05 points. Egypt's share index lost almost 1%, while Kenya closed positive on Friday. We head to the Middle East now, and it's all negative. Abu Dhabi dipped over 1.5%. Dubai took it even further, more than 2%. Saudi Arabia told that path, while Qatari's loss was minimal, 0.33% as intraday. Let's go to Europe now, being joined by Chris Kober, talking about the leader of Germany's Social Democrats proposing something like a speed limit on the country's autobahn, as well as a temporary driving bans. Well, Chris, why is she talking about this at this time?
Because of persisting high energy prices in Germany amid the war in Ukraine. Now, surging prices at the pump have become a huge issue here in Germany, where any topic revolving around cars and mobility has the potential to become highly politicized quickly. Fuel prices have continued to climb despite a government intervention, and that's why Saskia Esken, the co-leader of Germany's Social Democrats, pointed to the energy security law stemming from 1975, which would allow the government, among other things, to introduce a temporary speed limit, as well as banning people from driving their cars, for example, on Sundays. Now, the latter is a measure that Germany introduced in the fall of 1973 at the height of the oil crisis. On 4 Sundays, the nation's highways, the Autobahn, was empty. People got around on bikes, on foot, and on horse carriages, limiting the amount of fuel that was consumed throughout the country. Now, the reason why the Social Democrats are talking about this is because a government measure to deal with high fuel costs here in Germany has failed to show the anticipated impact. Now, at the beginning of the month, the government waived one of the taxes on fuel, amounting to around 30 cents per liter, anticipating that the price per liter would drop by this amount. But it only did for a short time. In fact, prices have now almost reached levels seen before the measure was introduced, a move that is to cost the German taxpayer around 3 billion euros or $3.2 billion. As for a driving ban, albeit a temporary one, I don't believe Germany's ruling three-party coalition government will find common ground on that.
Yeah, and this discounts at the pump, if it doesn't work, what would the government do about it? What does it look like they would do?
There is increased talk about a windfall tax, meaning taxing those companies' profits that have largely been benefiting from surging prices amid the war in Ukraine. Energy companies are expected to be among this group. So far, particularly the business-friendly liberals, which are part of the ruling three-party coalition here in Berlin, are opposing this move. Many experts are also not convinced by the idea. There is the fear that defining these taxable profits, setting up a tax rate, and determining which companies should be covered by it could all seem pretty arbitrary. That is why Germany's economy minister Robert Habeck of the Green Party is saying he wants to strengthen the country's antitrust laws in a way that would make it easier to identify cartels and the dominance they exert on a market. By the way, despite its impact being so low, the temporary discount at the pump is likely to stay in place until the end of August. In Germany's three-party coalition, only the Liberals have been a fan of the idea, as I said, which was their own. But abandoning it would apply extra pressure on this coalition that, amid the war in Ukraine and its ramifications, is struggling to find its course.
Well, there's another talk of windfall tax there. Well, let's look at the market. How are they doing at this time?
They are starting this week in similar fashion as they ended last week. Stocks remain under heavy pressure. In Asia, red-hot inflation reignited worries about even more aggressive U.S. interest rate increases, while new mass COVID-19 testing in China sparked concerns of more crippling lockdowns. The heightened expectations about Federal Reserve rate hikes drove the Japanese yen to a more than two-decade low against the U.S. dollar, and this anxiety has been spilling over to Europe. Markets here falling for a fifth straight session. The DAX in Frankfurt losing around 1.2% in early hours of trading.
Chris, thank you so much for that update from Berlin. Enjoy the rest of your day. And then we move to the UK. The conversation is not so different. We see that petrol hit a new high yesterday, 185 pence per litre. Juliana joins us now, I see, not from the studio. She's taking a bit of fresh air. I wonder how she got the petrol together. Juliana, good afternoon. At 185 pence per litre, how did you get out?
Good afternoon, Innie. Well, quite frankly, all it took was a walk down the stairs, which is lucky because I think to say that the cost of living crisis has deepened in this country is pretty much an understatement. Not only is inflation running at a 40-year high at 9% above the inflation figures that we got from the US recently, we've also got Labour opposition groups as well as charities saying that millions of people could be plunged into fuel poverty. But as the conversation twists and turns, I think over the past couple of weeks it's certainly been on the petrol pumps and how drivers are facing misery because of just how high petrol is. As you said, over the weekend we got a brand new high. Petrol reached over 185 pence per litre. If you're unfortunate enough to be a diesel driver, then it's much higher than that. It's about over 190 pence per litre. And motoring groups are asking for urgent assistance from the government. Now, a couple of months ago, the Chancellor Rishi Sunak did put a measure in place during the spring statement. I believe there was a 5 pence cut in fuel duty. But of course, people are saying that's just not enough at all, especially if you consider looking at this data that petrol is rising about 7 pence per week. Let's go back a year. A litre of petrol was about 130 pence per litre. It's over 180 now. It's costing in the average family about £100 to fill their car, and it's just not enough. What we have heard from the government is that Kwasi Kwarteng, the business secretary, he is currently overseeing some sort of probe to make sure that this 5p fuel cut has actually reached drivers. But of course, like I said, motoring groups say, it was reached quite a long time ago and they need urgent intervention now. So we'll just have to wait and see if the government bow to pressure and start providing it to drivers.
Well, I know we talked about windfall tax in the UK so a while ago. The EU is also talking about that. But just do we have an idea how the market is looking at intraday?
We do. We know that the market, red is the colour of the markets at intraday. Innie, I was discussing with Laddie earlier today that we got that April GDP figure showing that for the second consecutive month, the UK economy has shrunk. It shrunk by 0.3% in April. We had a pretty gloomy outlook, didn't we, last week from the British Chamber of Commerce as well as from the Paris headquartered OECD saying that they do believe that the UK economy will stagnate next year. And it does appear to show that this data is doubling down on the information that they have. So at intraday, we do see that the FTSE has fallen by over 1.8%. The FTSE 100 too down by 1.8%. And the FTSE 250, the domestic market, that's fallen by over 2%. No surprises as well that sterling has fallen. Sterling has fallen by the dollar at 1.04%, by the euro too at 0.55%, and also fallen the British pound against the Japanese yen at intraday by 0.99%. In a
Yeah, well, very reflective there. The market is actually reflecting the economy, and what this means is another drop in the GDP in the next release. Then it will now be declared that the UK economy has gone into recession. Very sad. But thank you so much, Juliana. We'll talk to you tomorrow, and we'll have new updates tomorrow. So let's move to Asia now. Shares in Asia tumbled today as major markets in the region saw sharp losses and the dollar yen hovered around 135 level. Hong Kong's Hang Seng Index fell 3.39% to close at 21,067.58. Tencent shares fell 4.89%, while Alibaba plunged 7.98%. The Hang Seng Tech Index declined 4.72% to 4,598.65. South Korea's Kospi fell 3.52% to finish the trading day at 2,504.51, led by tech shares like Samsung Electronics, which declined 2.66%, while Kakao was down 4.49%. Japan's Nikkei 225 dropped 3.01% to close at 26,987.44. Our shares of conglomerate SoftBank Group fell 6.85%. The Topix index declined 2.16% to almost 2,000. In Taiwan, the TAIEX fell 2.36% to close at 16,070.98, while TSMC's stock slipped 2.64%. The Shanghai Composite in mainland China declined 0.89%, closing at over 3,000. Our Shenzhen Component fell 0.29% to 11,999. And in the United States, stock futures fell back on Monday morning, putting the S&P 500 on track to slip into bear market territory and possibly to a new low for 2022. A jump in short-term rates drove the negative sentiment as investors still reeling from a hotter-than-expected inflation report, which was released on Friday. S&P 500 futures fell 2.2% after the benchmark closed Friday down 19% from its record high of just about 2.4%, which is above its sell-off low from last week. The S&P 500 briefly traded in a bear market down 20% from its high and but about 3 weeks ago, but failed to close in that territory. In the oil space now, prices dropped as a flare-up in COVID-19 cases in Beijing dented hopes of Chinese demand rebound, while worries about more interest rate hikes to control rampant inflation added further pressure. Beijing's most populous district announced 3 rounds of mass testing to quell a ferocious COVID-19 outbreak that emerged last week. Mass testing would take place until Wednesday. Brent crude was down $1.81 to $120.20 a barrel, while U.S. West Texas Intermediate crude futures was down $1.91 to $118.76 a barrel. And let's see what's going on in the metals market. Now, gold prices eased today from a 1-month high scaled earlier in the session as red-hot U.S. inflation data lifted Treasury yields and tempered the appeal of safe haven bullion. Spot gold was down 0.9% to $1,853.80 per ounce. U.S. gold futures also eased 0.97% to $1,857.40. Gold, which is seen as a safe haven asset in times of economic crisis, it is highest since May 9th, earlier in the session at $1,877.05 per ounce. However, benchmark U.S. 10-year Treasury yields also rose to their highest since May the 9th. We'll take a break now. When we come back from that break, we'll head straight to the African continent. We have lots of stories there for you. Do join us after the break. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Let's start off with Madagascar. As agricultural small and medium-sized enterprises in low-income countries struggle to finance growth, United Nations International Fund for Agricultural Development is stepping stepping up its commitment to assist these essential players for rural development with a new €3.5 million loan to Safari, an innovative women-led agribusiness from Madagascar. IFAD's loan will help Safari grow sustainably and reorient their business model by increasing from 30 to 70% its direct sourcing from small-scale farmers. This assistance is expected to attract a further €4.7 million in co-financing, benefiting approximately 20,000 rural people directly over a 4-year period. And then we move to Ghana, where international banks have pledged to lend Ghana $1 billion for budget purposes and boost central bank reserves as the country seeks to cut its fiscal deficit and stabilize the currency. The West African nation raised $750 million through syndicated loans with the participation of about 8 African and European banks and $250 million from multilateral lenders, and who did not want to be identified. Well, we have to speak to us more about this. Professor John Gatsi is an economist and is in Accra, Ghana, to speak to us about the economic situation in the country now. We do know also that inflation was released last week at over 27%. Good afternoon, Professor Gatsi. Thank you so much for joining us.
Thank you.
So paint for us the reality of it. We see that inflation was released last week at 27.6%. Where does this show in the price of goods, of edibles, consumables, of commodities? Paint for us the picture in Ghana at this time.
Well, as indicated in the last interaction, prices are still very high. It is creating problem for businesses, individual households, and it's also creating problem for the government because government is not able to execute some of its plans because of price escalation. Materials for execution of projects have become a problem, and we are now recording very high level of inability to execute projects, very high level of accumulation of arrears as a result of this situation. But one important thing about the inflation figure is like reporting a past event. There are many events that have taken place which have not yet captured into the inflation momentum. And those things promises that inflation may continue to rise as we go to the next window of election period, announcing the inflation figures.
Yeah, so we now see that some international banks have pledged $1 billion to assist with financing the budget. Where does this help? How does this help, especially when we talk about the ordinary man in Ghana?
Well, all these issues are creating some kind of tension among parliamentarians and among those who are very close to finances in the country. Because in the first place, we record very high level of debt and creating the problems we are going through partly. So when we hear such amount of money coming on board, we ask ourselves whether it's coming to create more problem for the country or it's coming to resolve, especially on the back of the record that the Bank of Ghana keep indicating that our reserve situation is very robust. It can take us through 4.5 months of import cover. So if we hear that we are going to borrow to shore up the reserve, it seems to us that either there has been misreporting, inability to account very well, and that is what is ahead of the government to be able to clarify. And again, it is strange to Ghanaians to hear that some international banks want to contribute to capital formation of the country or to raise capital for execution of the budget to show up the reserve, but they are not willing for their name to be recognized. And that is very strange to Ghanaians. So I think the finance ministry ought to come very clear, because for parliament to approve such borrowing, those who are lending ought to be known, the rate at which, the purpose, any form of condition that is attached to those borrowing ought to be disclosed. So I think we will wait for the next days to come to see whether Parliament will do the right. The Finance Ministry will do the right thing to clarify and let Ghanaians know that.
All right, Prof, just before we let you go, I know these are part of the reasons why you've had that Fix the Country protest. And the protesters have been really persistent. Have they gotten what they want? Are they off the street now? Are there talks going on?
Well, I think there have been many attempts to be on the street to carry us other kinds of demonstration. But I believe the police have become excessively active in stopping people to participate in this demonstration. They continue to do their work on the social media. Those of them who have opportunity on mainstream media are able to articulate their views. And that is what is going on in the country. And there are developments in the country that is fueling all those things. When we are talking about e-levy, that was the time that we were experiencing expenditures that the people believe that are not supposed to be the case. As we are discussing the economic difficulty, this is the time that Ghanaians are realizing that about 200 million Ghana cedis have been so far released for what they call the National Cathedral, which many Ghanaians don't think is the right choice at the time.
Mm. Well, I guess we all have to talk about our country and find ways to resolve the issue from the leadership to the followership. Thank you so much, Professor John Gatsey, economist in Ghana, for sharing your thoughts with us.
Thank you.
Let's move to other stories now. American Eurocraft marker Boeing could pay up to $6 billion in compensation to victims of two separate plane crash in Indonesia, Ethiopia, which killed 32 Kenyans in 2019. The new lawsuit follows a series of others that has seen the Euro accessories manufacturer pay billions of shillings in compensations and fines. Last year, families of victims of the two 737 Boeing MAX crashes that killed 346 people in Indonesia in 2018 and Ethiopia in 2019 received payment from the $500 million settlement agreement. In South Africa, the government is planning to introduce several reforms to create around 100,000 jobs for the country's millions of unemployed young people. The Social Employment Trust Fund will partner with non-governmental organizations across the country to deliver work for the common good. This work is in areas like community, safety, food kitchens, urban agriculture, early childhood development, and the fight against gender-based violence. Well, still in South Africa, going to the aviation sector now, Air Côte d'Ivoire will be launching the quickest route between Johannesburg and Abidjan on the 29th of June 2022 and will have 4 flights per week using the Johannesburg-Abidjan via Kinshasa route. Air Côte d'Ivoire believes the new routes will be key to opening up opportunities for investment and improving bilateral trade between the two countries. That's where we draw the curtains for today. We'll have another one tomorrow. Do join us then. I'm Amy John Mekwa.